What is up? Welcome to another Credit Card News live stream. I'm Cal Barton. So how's everybody doing this weekend? I just want to say what's up to Danny Boy. Nice to see you back again. Darren Hilton, you were here early, and thank you for stopping through. Miss Barton, John James, Just Cody, Silverman Fox is coming in from New Jersey. That's very close by. So welcome. And Deion Taylor, it's good to see you. So let's get started with the news this week. We got a few things, and we actually have a video to react to, and it's a little bit negative, but I think you guys are gonna like it. Let's start it off. So Apple's buy now, pay later plan launches. So Apple launched Tuesday Apple Pay Later, a buy now, pay later feature that allows users to split purchases into 4 payments over the course of 6 weeks. For now, the service will be available only to randomly selected users who will get early access to the pre-release version of Apple Pay Later. Apple plans to offer the feature to all eligible users. In the coming months, Apple Pay users will also be able to apply for Apple Pay Later loans of $50 to $1,000, which can be used for online and in-app purchases on their iPhone or iPad. So let's talk about this real quick. So this is going to be huge, right? Apple is known for entering the market later than others, right? And just like devastating the competition. They've done this time and time again. They've allowed other companies to come in and gain a little bit of market share and play a little bit in their sandbox, and they just come in and they say, you know what, enough. We're here and we're taking over the market. You got to get out. Klarna, Afterpay, who else have been put completely on notice because now you have access to Apple Pay. It's coming preloaded on your iPhone. Most of you probably have iPhones. If you have iPhones, text or type I in the chat if you're using an iPhone. It's going to come preloaded. So as soon as you check out and you're using your Apple Card or using Apple Cash, and they'll probably have a prompt come up if you're just using Apple Wallet, and they say, listen, you can go ahead and put this $50 worth of groceries. You know what I mean? It's like what, a couple dozen eggs, right? Because eggs are so expensive now. You put that into your cart and you try to check out. Now you can put that basically on buy now, pay later, and pay it off over like 6 weeks. That's huge. Now, people were speculating, why would Apple do this? And they're like, well, they want to gain market share and they just want to be in front of people's faces more often. They're making money. They're not going to go into a venture that does not make money. Whenever you see a company offering you something for free, like a debit card or credit builder, anytime you're transacting, people are getting paid. Companies are getting paid. So in that transaction made, they're charging interchange fees from the merchant. So the merchant is paying between 1% and 4% for every single transaction. So they're getting paid a little bit off of a lot of purchases. And that's how they're making big bucks. I got a lot of eyes in the chat. I see. Okay, I got a few. Scott Suggs, Dark Dude. All right. Roll. I like Deion Taylor. You said no way. No way. I'm with you. I'm team Android on Samsung. So next we have buy now, pay later could become a multi-trillion-dollar business. So Apple sees this, right? This headline is huge. Apple's already like a $2 trillion company, right? They see that they have a high likelihood of getting all of those iPhone users, and most of the people in the US are iPhone users, hundreds of millions of people in the US and then billions of people abroad onto their service, their buy now, pay later, and transacting with it. That's just another revenue stream to go in Apple's coffers. And so the market for buy now, pay later, an alternative to credit cards, whose popularity exploded during the pandemic, could surge to nearly $3.7 trillion by 2030 as more consumers take advantage of ways to pay for goods and services in interest-free installments instead of lump sums. So that's according to Straits Research, which puts the market at $132 billion now as of last year, and 360 million people around the world use BNPL, a number that could almost triple to 900 million by 2027. And while growth projects vary widely, BNPL BNPL services is expected to record a compound annual growth rate between 20% and 45%. And so PayPal dominates the market with 4 times as many users as the next largest BNPL provider. So that's going to completely change. Once Apple enters this market, their service is probably going to be better, right? Because they have a lot of, they put a lot of marketing, and they already have the install base of the iPhones. And they're known for basically perfecting any sort of industry that they get into. So it's going to be a huge deal for them, and it's going to earn a lot of money, I think. So credit card debt is at record high as Fed raises rates again. So as the Federal Reserve raises interest rates again, credit card debt is already at record highs, and more people are carrying debt month to month. The Fed's interest rate increases are meant to fight inflation, but they've also led to higher annual percentage rates for people with credit card debt, which means they pay more in interest. It's funny to see that they have to spell it out so plainly in this article. But the Fed announced last Wednesday that it would increase rates another quarter of a point. With inflation still high, people are leaning on their credit cards more for everyday purchases. And so that goes hand in hand with buy now, pay later having that big surge and that big spike, because people are having trouble just paying off $50 and $100 purchases, right? The average person doesn't have enough money to cover a $400 emergency expense right now. 2/3 of people, or no, I'm sorry, it's either 1/3, I believe 1/3 of people making over $100,000 a year are living paycheck to paycheck. That's where we're at right now. Okay. And it says 46% of people are carrying debt from month to month, up from 39% a year ago, according to Bankrate.com. Data also shows more people are now falling behind on their payments. So 46% of people, those people are helping to pay for our rewards. Because I know a lot of you, right, are not carrying any sort of debt, especially if it's not like a 0% interest period. And those people that are paying interest are helping to pay for our credit card rewards. Also, Florida Governor Ron DeSantis introduced state legislation banning CBDCs. So that stands for central bank digital currency. So Florida Governor Ron DeSantis proposed legislation on Monday that would ban central bank digital currencies from the Sunshine State, portraying it as a measure to safeguard Floridians' financial privacy. The legislation would prohibit in Florida any CBDC that the U.S. Federal Reserve could introduce, and any created by a foreign government, outlawing the technology entirely from being used as a form of money within the state. It's interesting. Do you think that the government should be moving towards using a digital currency to, that would rival Bitcoin, that would just basically be a digital dollar? Do you think that's a good kind of goal to hit? You think we should, be transacting using digital currencies? Next, we have, what happens to my credit card account if the issuing bank shuts down? This is a really good question. If the bank fails, the FDIC takes over and keeps the credit card business running while looking for a buyer. The failed bank's credit card portfolio is transferred to the acquiring institution, which becomes a new issuer and sets the account's terms. The new issuer may change the interest rate on new and existing balances and the credit limit with sufficient notice. Customers may also receive a new card number, a different brand name. It's important to stay updated through the bank's website. So this is probably in reaction to what happened with Silicon Valley Bank and Signature Bank, and I think it was 5 banks in total that went under. But what you have to know is that your credit card issuer can change a lot of these terms on the fly, within just a short order. They can definitely change this stuff up on you, and people learning that their interest rates are going up along with inflation, right? And so that's why it's so bad to carry debt, because the cost of carrying that debt is just ever growing. But this tends to happen when banks they merge, or maybe the portfolio from a particular merchant, that credit card portfolio is sold to a different bank, and so they're going to have different terms that go along with that. I covered this last week, even with the Tomo Credit Builder card. They did something pretty, I think is malicious. They changed the fact that card is free, and they're actually charging a monthly fee of $2.99. Now, they don't call it a monthly fee, but they call it like a a usage fee or a membership rewards fee, whatever. They just basically try to use a euphemism to kind of use this kind of flowery language to mask the fact that they're charging you a monthly fee for that card. You can get so many different competitors' cards that will build your credit the same way that are completely free. And so, but it's well within their rights to do that. And it's also well within your right to cancel that card and go somewhere else. Take your business somewhere else. That's why it's always good to diversify across banks, across credit cards. And, I usually like to say go to, large banks like Chase and Bank of America, and go to credit unions like Navy Federal and PenFed and so on. And then also fintechs. I think it's good to spread your usage, spread that out over, those three major categories, and just use them all to expand your credit card portfolio and gain and basically enlarge your available credit limit. So next we have the Consumer Financial Protection Bureau officially takes aim at credit card late fees. So on March 29th, the CFPB published a proposed rule in the Federal Register to amend Regulation Z, which implements the Truth in Lending Act to limit late fees charged on credit card accounts. If adopted, amended Regulation Z would adjust the safe harbor dollar amount for late fees to a flat $8, down from the current safe harbor of $30 for first violation and $41 for second violation within 6 billing cycles. It would also provide that late fee amounts must not exceed 25% of the amount of the required payment deemed late. So I think that's pretty cool. That last part about, it doesn't make sense for the late fee to be $40 when you owe $10, right? So I think that that's a good point. CFPB, they're the regulating body for kind of the financial space. They charge companies, they will fine them. They will raise charges and kind of put forth, not amendments, but they will basically try to impose regulation to get them to do right by the consumer. That's what they're there for. Also, why and how are virtual cards disrupting the finance industry? So virtual cards to the finance industry are what mobile phones were to the telecommunications industry. In 2022, the virtual card market size was $411 billion. By 2032, this valuation is expected to shoot up to a staggering $1.3 trillion, and virtual cards carry the potential to change the way you spend. Here are some reasons why. Transacting using virtual cards is not only faster and seamless, but also secure and convenient. Virtual cards are widely accepted. Over 39% of businesses in the US use virtual cards to make B2B payments, or business to business. And then also virtual cards are environmentally friendly. Now the last part, I don't think needed to be in there. I love the environment, but I don't think people really are concerned about that part. Now, virtual cards are really cool because I like them a lot for a couple reasons. Because as soon as you're issued the card, so say for example, you sign up for a card like the X1 card, right? A lot of you probably like that. As soon as you get approved, you get access to the credit card, and you can put it on, you can add it to Google Pay or Apple Wallet immediately and start spending on it, right? So it helps you in that way. So maybe if you want to go ahead and meet a sign-up bonus, you can go ahead and get to it. Virtual cards are safer when you're using it in public. You don't have to it provides that extra layer of security so that you don't have to reveal your credit card number at the terminal or the point of sale. And then allow you to just keep your whole credit card portfolio. Like if you have like 20 cards, you could put all those into your phone and basically you have access to all your cards at any given time. You know what I mean? So virtual cards are also good for business cards. I learned this recently, and also I have links to this on my website. If you use corporate credit cards, right, which means they're cards that allow you to issue as many virtual and physical cards to your employees as you want. That helps, and they help you control spending. And you get to, they have like an expense management features to them so that you can set budgets for your employees, and you can basically really lock down where those cards are able to be used. And so virtual cards are good for that purpose too. All right, so credit card spending topped $13 trillion last year. So global spending on credit cards last year rose to more than $13 trillion across in-store and online checkout, according to an annual report from Fidelity National Information Services. So FIS attributed the rise to more sources of credit, including digital wallets, loaded with credit cards, buy now, pay later options. We talked about that, right? Point of sale financings offered by fintechs, banks, and merchants, facilitated by real-time payment rails. Account-to-account payments are becoming a more popular payment method globally. That's Zelle. All the people using Zelle, that's you. And then global account-to-account transaction value was about $525 billion last year. And guys, if you're in the stream, I got 60 people in here right now. It's really good to have you. Hit that like button if you want to see more live streams just like this. And we're going to get to it. So next, Wells Fargo Propel card is discontinued. So I know, Nino, if you're in the chat, let me know, because I know you had the Propel card. A lot of people like this card. I'm not too familiar with that one, but they discontinued that card. And basically, if you have that Wells Fargo Propel card, they're going to automatically move you over, transition you over to the Wells Fargo Autograph card. So you do have the option always to cancel if you don't want that card. But I like the Autograph card. I know a lot of you don't like Wells Fargo. Let me just preface by saying that. But the Autograph card is solid. I mean, it's coming with, I think, a 300. Well, here's the thing. If you're doing the transition, you're not going to be eligible for a sign-up bonus. But if you are interested in the Wells Fargo card, I believe right now it's coming with a $300 sign-up bonus when you spend a certain amount in the first 3 months. And it's really travel focused. There's no foreign transaction fee. And you're getting 3x points or 3x cash back. Correct me if I'm wrong. I know you're getting 3x back in 6 different categories. And so it's really good for that type of spending. And so next we have the Chase Amazon Prime card just changed. Okay, so the Amazon Prime card is changing its rewards program effective on May 1st. So guys, get this. The current 2% cash back on purchases made at drugstores will be replaced with 2% cash back on ride shares and transit, while the 5% cash back on travel booked through the Chase portal will remain unchanged. This means the cardholders will now earn rewards for using ride shares and public transportation rather than at drugstores. You guys think that's a good thing, or is it a bad thing? Is this a nerf, or is this a buff, or is this kind of like a lateral move? You know, personally, I think that this was a card purely meant for Amazon purchases, right? It's really meant for Amazon. So anything they change other than that is really not good. It's going to be inconsequential, because you should at least have a flat rate 2% cashback card in your wallet, in your lineup, to cover any 2% category that you want. Okay. Now, the fact that they went from drugstores to transit, I think it's probably a good thing, because there's not that many cards. There's far more cards. Well, I wouldn't say far more. I think it's more beneficial to have an elevated rewards at transit as opposed to drugstores, because you can already get a Chase Freedom Unlimited or Chase Freedom Flex, and they give you 3% cash back at drugstores. Unlimited, you know what I mean? Next, we have earn cash back on your taxes. Now, guys, if you want access to information like this a few days earlier, or at least a day earlier, I cover this, the top 3 stories in my newsletter. You can get access to that in the pinned comment on the stream. And that's just one of the stories, and we're going to get to it. So it's possible to pay your federal taxes with a PayPal MasterCard, which can earn you 3% cash back and some extra time to pay. But there are risks and fees involved. Third-party processor charges fees ranging from 1.85% to 1.98%. Carrying a balance on your credit card will result in interest charges. Additionally, having a large amount on your debt or maxing out your credit cards may negatively impact your credit score and affect your ability to secure favorable loans and rates. So this is a really good time we're living in, because for one, historically, it used to be more expensive. The processing fees used to be a lot higher to pay your taxes. They used to be around 3% or just under 3%. Correct me if I'm wrong, guys. Now they've lowered them down to just under 2%, right? As low as 1.85. And now PayPal is they have their PayPal MasterCard, which is issued by Synchrony Bank, which you should know. PayPal is offering you 3% cash back, unlimited, on anytime you use that PayPal button. Anytime you pay through PayPal online, or in some places offer PayPal in stores, then you're going to earn 3% cash back. So that means that there's a spread of about 1.15%. And so even if you choose to pay with a credit card, now you're going to be profitable if you use that PayPal MasterCard, which I think is pretty cool. All right, next we have new Rocket Mortgage Card, home savings and payments. So I wish I could get like a graphic of the card itself. I don't think they released that yet, but the new Rocket Mortgage Visa Signature Card comes with a reward system that's hard to decipher at first glance. So just so you know, with Visa, they have a tiered system for their cards. They have a standard Visa, they have a signature Visa, and then they have a Visa Infinite. And so with the standard Visa, there's no telling what credit limit you'll get. With the Visa Signature, you're going to at least get a $5,000 starting limit. And with the Infinite, you're automatically getting a $10,000 limit. You guys should know that. So while advertised as a cashback card, the card offers 5x Rocket Rewards points. The Rocket Rewards points. So they come up with any name for these things. On all purchases. The value of your rewards will depend on how you redeem them. That's the catch. And this is the catch for a lot of cards that really try to, trip you up when it comes to determining the real value of it. Your points are worth 1 cent each when redeeming towards for a down payment and closing costs with Rocket Mortgage up to 1,000 or 8,000 in rewards. So you're essentially earning 5% cash back on all purchases if you're using your points this way. Or your points are worth 0.4 cents each when redeeming towards Rocket Mortgage loan principal. All right. So in this case, you effectively earning 2% cash back on all your purchases, and your points are worth 0.25 cents each when redeeming towards a statement credit, meaning you'll be earning 1.25% cash back. So this really reveals itself. You have to basically go through the whole process of figuring out, you basically got to do math. They're making you do math for no reason, right? I hate when credit card reward systems force you to go through the laboring process of doing this, right? And calculating this. So they know that you're going to buy a house like once every, like, at least, people stay in their house for at least 7 years, I think, on average, but a lot more people will stay in there for 20 plus years. So they know that you're not going to be buying a new house anytime soon. So don't have to worry about you redeeming for a new home purchase or down payment. So that's out the window. Now you're mostly going to be redeeming for loan principal. But at that point, you're earning 2% cash back. You could just use a flat rate 2% card. What's the point of getting this one? And then here's the big thing. This card has a $95 annual fee, which I should have listed here, but it's got an annual fee equivalent to the Chase Sapphire Preferred card. That makes no sense, right? Why would you get this card? This is dead on arrival, I think. But guys, if you think I'm wrong, let me know in the comments. If you think I'm wrong about this card and this is something you would definitely pick up, go ahead and leave type the letter R in the chat if you think this is a good card and you want to pick it up. All right, finally, we get to the name of this stream. All right, this is Green State Credit Union gives soft pull approvals. Now, I do want to give a quick caveat. So one person stated, and he was that okay. Actually, let me give you that after I get this out. So the Green State Credit Union, based in Iowa, and with 400,000 members, offers 3 credit card products with low non-variable rates and no annual fees. So I actually haven't seen this too much, the non-variable part. Usually your credit card rate is going to start at like 17% or whatever, and it's going to go up from there with the Fed rate. These are non-variable, it says. They soft pull your TransUnion FICO A score for approval and offer small bonuses of $50 to $100. The World MasterCard gives 5x points on hotels and airlines. That's huge. I think that's a pretty good reward system for a credit union, right? The starting limit is guaranteed to be at least $10,000, and joining is technically restricted to Iowa residents or workers, but there is a loophole that allows joining through American Consumer Council for just $8. All right. Credit limit increases require a hard credit pull, and I think that's the only downside. And I actually covered this a day ago in my newsletter, so sign up for that for sure. I think that I haven't seen a card, and I'll cover this more in depth in my next video. I haven't seen a card that offers a complete soft pull to get approved for the card. Usually what happens is you can soft pull to get that pre-approval with the starting limit, and then once you accept the offer, they will hard pull. And for this credit union, they don't do that. And I've seen numerous accounts of people getting access to these cards. There was one person who said in this chat a few days ago that this that he said that he got a hard pull. So what I would say is that what you would probably want to do just to make sure, absolutely, is freeze your TransUnion credit report just to make sure, and leave it frozen and see if it goes through. What you'll need to do if you're out of state, which probably most of you are out of the Iowa area, is, and I called in to verify this a few days ago, and customer service was very nice. They said that you can be out of state as long as you're a member of the American Consumer Council, then you can sign up. All right, so it's open to anybody who wants to go through that process. But this seems like a cool card to have if you're in the market. If you want to raise your available credit limit, this might be a good way to go to raise that limit up and get access to some more funding. So let's see. All right, so guys, I just want to let you know, if you do sign up for the newsletter, you will get access to the Capital One upgrade page. It looks sort of like this. So basically, if you have a Capital One Quicksilver card that has an annual fee, usually it's like a $39 annual fee, or have another card like the Venture card, you can basically see if you're eligible for an upgrade with just it's not even a soft pull. It'll just show you automatically what you can upgrade to. All right, you get access to a link to that. You get access to the Airline Transfer Partner Lookup Tool. This is cool. You basically can add this to your own Excel spreadsheet style account. I think it's through Coda, and it allows you to quickly input your credit card system. So maybe you bank with Chase, and then the airline that you want to travel on, and it will tell you what transfer partners that you can use to move those points over to book those flights. Then you'll get also the sign up bonus tracker. Now this comes in handy right now because the Chase Sapphire Preferred card is now offering a 90,000 point sign up bonus when you go inside of a bank branch. So you want to set like an appointment with your local Chase branch and then sign up that way to get access to the high bonus. But this will tell you, and you can just filter by issuer and network, and this will give you added information like what was the highest sign-up bonus ever offered. So you basically can make a determination if this is a good time for you to sign up or if you should wait a few months to do it. You also get access to the merchant category code lookup tool. Now this is from a website that I have links to this, but if you're ever interested in knowing, like, will my Citi Custom Cash card earn 5% back in this particular category? Maybe you want to find out whether, Costco is considered a wholesale club or a grocery store, and something similar is 7-Eleven considered a gas station or like a convenience store. This will help you find that out. And then also you're getting the improving bad credit flow chart. All right, and this kind of takes you through a step-by-step of figuring out if you have bad credit, what the next step you should take to kind of fight those negative impacts on your score. And finally, you're getting a Chase. I'm sorry, not a Chase. Chase is on my mind right now. You're getting the cheat sheet for increasing your credit limit. So I have 12. I kind of condensed 12 core concepts into a little cheat sheet to help you determine what you can do, some strategies that you can take to increase your credit limit. So, guys, I just want to say what's up in the comments here. Yo, Dark Dude said, I'm assuming that you're responding to the Wells Fargo. What's that Wells Fargo? The Rocket Mortgage card. You said G for garbage. Garbage. I hear you. And then also, Raul, what's up, Raul? You said Tomo better start offering good rewards for that late fee. So let me explain to you what Tomo told me. So I had the Tomo card because I just wanted to try it out, you know, because I had it in one of my videos that they will show your starting limit. Now I'm gonna have to blast them, guys, because it's ridiculous what they're doing. They're telling you that they're not charging an annual fee when they are, and they're kind of blindsiding people. They're trying to basically tell you that you're getting $500 worth of value from this card by having, like, I think you get like $800 or $500 worth of cell phone protection. You're getting like Lyft rides. They're basically trying to market the rewards that come from the payment issuer. I'm sorry, the payment network, which is MasterCard, as their own, and saying, listen, the Tomo cards give you this. Well, any card that's a MasterCard, that's a World Elite card, gives you that. So why is this worth $299? I could easily go for all the other startup fintech cards that build your credit in the same way. It doesn't make any sense. Tomo is a no-go. It's a complete no-go. So guys, I'm gonna just I have a video, and guys, I want you guys to react with me and tell me what you think about it. We might not make it through the whole thing just because it's a little longer, but there's a few points I wanted to hit on it. Let's check it out. Let's check this thing out.
Today, for many people around the world, the credit card is the most common form of payment they use on a daily basis. And of course, we all know now how dangerous these cards can be in terms of racking up debt, but it turns out that there is a whole other side of credit cards that might be costing you a lot more than you realized. Now, people have been spending money they don't have pretty well since we invented money. We have 5,000-year-old Mesopotamian tablets detailing agreements to buy something now and pay for it later. This is a dangerous game that for some reasons humans just can't stop playing. Just like the sponsor for today's video, World of Tanks. User to earn rewards, build their credit, understanding of how they actually work. Now, first of all, let's look over some of the potential benefits of a credit card because it's not all black and white. A credit card can enable a savvy user to earn rewards, build their credit score, and spend easily online or on the go. It offers more fraud protection than a debit card, and it is more secure than carrying around a briefcase full of cash like you're in Breaking Bad.
Goddamn right.
Theoretically, a responsible credit card holder could actually make money by spending on a well-chosen card.
7 million.
Now, I just want to say, with credit cards, there's an additional feature that someone brought up that was really salient, and it was that you can easily issue a chargeback on a credit card. You can't do that with a debit card. So if there's like a fraudulent purchase that you don't agree with, maybe a subscription service charged you an additional month when they weren't supposed to, or maybe you were double charged. In a situation like that, you could call up your credit card company and say, listen, this was fraud. I didn't authorize this. And they can stop that payment from happening. And so you really can't do that with a debit card. That money's just coming straight out of your account, and it's probably gone at that point. You know what I mean?
But of course, that is not the majority of credit card users. We are all familiar with the debt horror stories at this point. We all know that credit cards pose a serious risk of trapping you in never-ending interest payments that your grandkids will be paying off until they die.
'Cause I have $30,000 in credit card debt. When they call, I tell them I can't pay it back yet.
But thankfully, we seem to be learning from our mistakes. Forbes reports that the average credit card debt per person has gone down recently, so that's encouraging. But here's the thing, even if you manage to dodge the crippling debt and pay off your monthly card every single time, there are so many other ways that these companies are manipulating you for a profit, starting with those rewards. Now, credit card rewards just sounds awesome, right? I mean, you're spending money anyway. Why would you not just get a little something, something in return? After all, you're a responsible, pay your debts off on time kind of person. Why not rip off the usurious sleazebags taking a profit off of everybody else? Usurious is not my word. That is a word from our right.
So, I spoke about this in a recent video about Chase cards, and I got a lot of flack for that, for calling out Chase. But it's really not just them. It's Amex too. It's any card that's going to offer you points, and it's going to get into in this video. But the problem with points is they kind of obscure the value, and especially with Chase, because it's so beloved, people don't understand how much these rewards are actually worth, and they're spending. They may not even be travel focused. I know I have coworkers that are like that. They're not even going to be traveling much, but they're using that card all the time, thinking that the points are going to get them somewhere.
Writer Holly. So thanks, Holly. You're an old lady and I love you. I mean, the draw is so real. Americans on average hold 4 different credit cards just to capitalize on the rewards programs. But of course, that is not the average American. There is a whole subculture of people devoted to finding out these hacks and tricks to manipulate the system. Now, I don't even know how many people are out here like this, but there is people like the Points guy who literally make a living talking about this stuff. And of course, people with like Pokemon collector card folders full of credit cards are the outliers in the data. These are just a bunch of really nerdy people who've decided to spend their time thinking about credit cards all day.
Now, I just want to say this video has about 300,000 views, and he's calling us, this is us he's talking about. We're outliers. We're nerdy people. We're in the minority. He's talking about me. He's talking about you guys. I just find it interesting to find out like how the general public feels about, the credit card enthusiasts, this community that we're a part of. It's funny. Do you guys are offended by this? Let me know.
I'll chop your credit card in half. How about that?
And the rest of us, normal people, have real interests like sports teams, stuffed animals, and their favorite YouTube channels.
So we're not normal? Is that implying that we're not normal? So listen, I think along with you guys, we all have multiple interests. It's not just credit cards. So we can't just be confined to that box. I'm sure a lot of you like sports and other hobbies.
Now, for us normal, well-adjusted, future-proof subscribers, the points on a single credit card aren't really going to improve your life that much. But you wouldn't know that because the companies who designed them have made these cards deliberately vague with a buttload of fine print so that you don't know what's going on. Now, I'm going to pick on the American Express Gold card here for a minute. It is CNBC's top-rated rewards card for the average American consumer.
Now, I just want to say, why... He said that it would not improve your life that much. Now, let me ask you this. I liken the amount of money that you can earn in value from a credit card. Some people earn $500 in a year. Other people earn, a couple $1,000s in value. If you're using like a reward system and you really work it, you're a nerd, right? And you use Chase points to the highest value. The problem with saying that is that you're negating the real good that can be done from earning rewards back, right? And why would you diminish $1,000 a year? That's like a really simple side job. That's like having a side job that earns you, $50 to $100 a month. I think anybody would love to have that amount of money in their bank account added per month. And that's what you can do with credit cards. And the thing is, the system, and they're going to get into this, but you're already paying an elevated price for these items, for these goods and services. You might as well earn some money, earn some value back from that.
One that a lot of you are probably familiar with, and it represents one of the best case scenarios for a rewards card. So let's get into it. Like virtually every other rewards card, it uses a point system that doesn't easily translate into dollars. So $1 spent almost always translates to some massive number of points, which they seem to assign randomly. And then they get to change how much value the points are worth depending on what you buy to complicate things further. For example, on their website, you get 4 times the points for restaurants and groceries, but only 3 times for flights that they have specific agreements with. And we're gonna get to that in a minute. So why do they use the point system if it's so complicated, Levi? Well, this gives the company a few benefits. It allows them to be flexible with the value. They can literally adjust the value of these points as they go without you even knowing, which is all the easier because you really didn't know how they worked in the first place. They're then able to make bold claims about how many tens of thousands of points you can make by using their cards without anyone actually knowing what that means.
What is this?
Now, at
Yeah.
least
And I believe this is true because, this is the hard truth. This does happen. And that's why I'm so pro cashback, because at least from the outset, you know exactly the value, the dollar value that you're getting back. So that's why I love the City Custom Cash. I love flat rate 2% cards, and any that has a permanent cashback value to it, love it. Makes it easy, and yeah, it's really deceptive.
provides a handy breakdown if you know where to look for it. Some companies don't even do that, but let's just take a look here. It is a full page of boring technical details that you'd need a credit card nerd degree to understand. And as we mentioned, this point system can range a lot. 1 point could be worth as little as half a cent depending on where you spend it. So that 60,000 points you earned by spending $4,000 in 6 months might actually just be.
This is a big deal, guys. So whenever you're redeeming, this is where they really get you. And this is really evident. Just say my City Custom Cash card, right? That's a cashback card. But when I go to the Shell gas station to pay for my gas, guess what happens? It automatically pops up and says, hey, do you want to redeem your cashback points here? And it's at a reduced rate. And they don't let me know that it's reduced. They just go ahead and offer it for that rate. I don't know what's in my balance at that point. I would have to go and check my account. That's deceptive. I don't like that mess. Okay.
Worth about $300, which is just a tiny bit more than the $250 annual fee. Now you're sitting there thinking, hey, listen, I'm spending the $4,000 anyway. That's a nifty little 50 in my pocket. What's the big deal? And also, what's that accent? But you have to ask yourself, do accents really matter? And were you going to spend that $4,000 anyway? Remember, nothing is truly free. Amex is not giving you 60,000 points out of the goodness of their hearts. They're making money off of you. It's interesting to note that Amex is specifically looking for clients with good or excellent credit scores, as in clients who pay their bills, as in clients that don't make any money for them off of interest. That means that if they're not making money off of you in one way, they're making money off of you in another way.
Is the potato here? Oh, this trick's a real lemon.
And specifically in this case, off of partnerships with specific businesses. According to one estimate, people spend 15% more with a rewards card than they would with cash. And credit card companies know this. Now, a good way to know if a credit card is.
All right, guys, I want to know, this is a big question. I asked this a few times. Do you think you spend more money with your credit card? Is just the sheer fact that you have the card, are you getting that extra drink at the bar? Are you getting, the extra pack of cookies at the grocery store? Are you spending more because hey, I got this I got this huge available credit limit in my wallet. I got 100,000 just ready to go. Are you going to spend it? Is that true for you?
being sleazy is when they partner with a specific company or service for a card, like the fact that Amex gives you Uber Cash with your Gold card. This may sound great, but as we have discussed in earlier videos, Uber Eats is a huge ripoff for you and literally everyone else involved. Today, there is a credit card for almost everything out there, and the only reason that it exists is to get you to buy more of that particular thing on a credit card, which is great for Visa and Hello Kitty, but rarely for you. Now, the Hello Kitty thing is, yes, a bit funny, but there is a lot of these things, and the way that they get you to buy stuff that you don't need is impressive. These store or brand-based cards often offer deals, but only if you meet certain requirements. And of course, those requirements largely center around buying more stuff. Gap, for example, offers cardholders free shipping as long as they spend at least $50. You might also see deals like spend $150 and get 15% off your order. But you have to ask yourself, are you actually saving money at that point, or did you just go on a totally unnecessary shopping spree just to feel like you saved 15% off?
Yeah, so listen, nobody's ever really gonna advise you to go in and get a store card. And the problem with store cards is that they're only good for one store. That's huge, right? You can only shop there with that card and redeem with that at that particular store. And then also, they don't really count when you're trying to go for more cards. They're not looking at your store card available credit limits to they don't show up as good marks to help elevate your other personal cards or your business credit cards. They don't even look at the store cards. They're not worth anything to you on your credit profile. So they're bad in that from that perspective as well.
Another huge factor here is that these cards also encourage you, or rather limit you, to shopping at just one location, disabling you from shopping around to find the best deals. In short, rewards cards shape the way that you spend your money, and almost never in a good way. Some financial experts recommend to just not have a credit card at all for these reasons. Now, we're not financial experts here, and this is not an...
Yeah, I would never advise that, not have a credit card. There's definitely good, we already covered why they're so good. And the system's already set up, right? We can pick how we play our hand, but we are given this hand. The hand is that the banks have already set up the credit card system. The cost of goods and services are already elevated to support that system. You might as well be earning cash back or points to be a stronger player, right? And the store credit cards, I would only advise a store credit card if you know you're going to be shopping there day in and day out. For example, Amazon store card. I have one. It's one of my first cards, but I use it a ton. I get so much value from it. And Amazon literally has hundreds of millions of items, right? So I'm getting a ton of value there. But and there's only a few use cases, a few cards that can really compete with that.
Individual financial advice, of course, but we think that if you're going to use a card, you might want to be careful about what rewards you buy into and make sure that it really matches your lifestyle. But here's the crazy thing. Beyond the points and the rewards and whatever, that's not even the only way that credit cards are making their dollar bills. This stuff actually grinds my gears. You could be the perfect card holder with a carefully selected no fees card you pay off monthly, and you might have divine willpower that enables you to resist all the psychological wizardry that these corporations throw at you to get you to buy more, and yet they will still win by over small businesses. See, while they scrape and glean money off of your shopping spree, they're also taking a cut from the store that sells the clothing too, or candles, or macrame decorations.
Okay, so what he's talking about is interchange fees. And so here's the problem. He already stated earlier in the video that card holders or credit card spenders will spend 15% more at any given merchant. So that's more product or service that you can buy for the average person from that merchant. So that's why they use the system, because they know that a lot of their customers are going to come in wanting to use cards to pay, right? So they're wanting to cater to their customer, and also they're gonna get larger order sizes and more profit from it. So that's a false argument here.
I don't know what you're buying. That's right. Stores pay for the right, nay, the privilege of offering card options to their customers. So every time that you swipe that card, you're costing the merchant somewhere around 1 to 3% of the purchase, plus a flat fee per transaction. Oh, God. Now, how much they have to spend depends largely on the card that you use, and reward cards are most likely to be charging the most. American Express, incidentally, has the highest average merchant fees, and this is why you'll see a lot of shops straight times hold merchants responsible for fraud cases. So if somebody steals your card, goes on an insane shopping spree buying a bunch of Hello Kitty crap, when you call the bank to deal with things, that might mean that they're going to go back to the Hello Kitty store to force them to pay back the exorbitant amounts from the stolen goods. Now,
listen, it's better they go back to the store than take it out of your account on your wallet, right? Listen, I think I've had enough of this guy here. Let's get back. Let's get out of this. So I just wanted to kind of go over, I know he was very anti-credit card in that video, but I thought he raised some decent points about the value of points and how they kind of obfuscate or try to keep that hidden from their cardholders. And I think it's worth having a debate, you know, are they good? Are they bad? I think it's also good to see how they view us as well. I always like to, it's always interesting for me. But I got some comments here. What is up? Benji, you said, I didn't even know they gave out limits that high. How high were the limits that were stated? Because listen, with most consumer cards, you're going to get a limit of around 25,000 as the max. And with business cards, I mean, if you personal guarantor them, they're probably going to go up to like, 30 to 50,000. But if you're using your business, cash flow or collateral, then it can go up much higher than that. I think over 100,000 to even 200. DJ Bruce Wayne, what's up, man? What's up? You said store cards are traps set up for consumers looking for a quick fix. It becomes a want and not a need, nor a tool financially. Yeah, I think with the store cards, they try to get you with that 25% discount. So I think it's basically like getting a sign-up bonus right in the store. I think that's it. And I think it's the sign-up bonus aspect of it. And the fact that you can kind of like I don't think you can still put the purchase on that card that you signed up for, but I think it's the sign-up bonus aspect of it. Dennis McMillian, you said, get him out of here. Yeah. Yeah, I got him up out of here, man. I just thought it'd be fun to react to that a little bit. All right. You said we got a comment from Thomas Gray. What's up, Thomas? I don't think I've seen you, so welcome. He said, I use Citi Custom Cash credit card. I am very happy with it. Good. Listen, I got 2 of those cards, and I use one for gas, and then I use the other for groceries. So, but the good thing is that they're so flexible. You can use them in basically any major category, and it's really good for that. Good for that purpose. And we got Miss Cupcake. Welcome. You said, I'm not a fan of Synchrony Bank, so I stay clear of store cards. Yeah, Synchrony seems to have like a real chokehold on the store credit card market. I mean, that's their business model, right? They have cornered the market on partnering with merchants, right? They made it very easy. The good aspects about Synchrony, I would say, is that they have better approval odds, so you can have worse credit profile and get approved. And they're going to give you high limits. I got a couple, my Venmo has a $20,000 limit. I think I got a 20K limit on my PayPal card. Like, they just throw high limits at you left and right. But the bad thing is that they're Synchrony. So they've been caught up in a few scandals. They will lower your credit limit if they deem you unworthy at some point for whatever reason. And so they just have a bad reputation from that standpoint. All right, we got Joe Ansman. What's up, my guy? You said I got multiple credit limit increases: the $8,000 with the Venmo, $1,000 with Apple, $1,900 with Capital One, and $8,000 from Care Credit. Nice, man. That is huge. So you went basically on an increase spree, right? That's huge. So you know what? I'm gonna break something out that I haven't done in a while because that is huge. All right, we got the money gun. Joe, that's for you. All that cash. I don't even think I shot enough $100 bills out on that one. That's for Joe. Can anybody rival what Joe did? Wondering Dog, you said, what is Care Credit? I think Care Credit is it's a health insurance card, or not health. It's a health focused, like you can pay for, healthcare bills with it. All right, DJ Bruce Wayne, you said you got some awesome news. I just got a credit line increase from my Chase Sapphire Preferred for $10,000. Called in. Can you believe that it was a soft pull? Actually, I do believe it because it's been shown that if you have a relationship with Chase, they will show you your pre-approvals now. And I think the soft pull, they just started implementing soft pull increases as of the past like month or so. But listen, congrats on that, Bruce Wayne. Huge. That's huge. Good job. He said it's a $31,000 limit. Man, Chase loves you. So Danny's coming in through with a few increases. My Navy Fed more rewards. Amex came from 24,900 up to 27,500. Listen, it's a modest increase, but that's close to 30K. What is up with Navy Federal and these odd credit limits? Why not put you up to 28,000? Is my question. Or even better, 30,000. Why not go in a $5,000 increment? Just take you up from 24 all the way up to 30. Why they got to put you at 27.5? They must be using some like really strict formula for that. Congrats, by the way. Very good. I remember you were saying for the longest time that you wanted to be a member of Navy Federal. You started, I think you recently got approved like 6 months ago, and now you're up to almost 30,000 in credit on the personal side. That's huge. Well, guys, listen, I got new videos coming out very soon on getting higher credit limits on the personal side. I'm also getting into business. You can check that out on my website. I got business funding available for you as well. If you run your own business or you're an aspiring business owner, I can help you with that. But I do these live streams every Sunday at 7 p.m. Okay, so you're going to see me back here next Sunday, 7 p.m. same time. Everybody, have a great week.